every mortgage comes with closing costs. In fact, closing costs is really a catch-all term. There are several different costs and fees that can be part of finalizing your home buying journey. Your closing costs will vary depending on a host of factors, from your lender and loan type to your location and more. For VA buyers, the good news is this loan program actually limits what you're able to pay in closing costs. There are even costs and fees that VA buyers aren't allowed to pay. Closing costs and concessions are always up for negotiation. It's important to understand that sellers aren't required to pay any costs on your behalf, but you can always ask them to pay some or all of these costs when you're making an offer on a home. When I talk about closing costs with buyers, I break them down into two broad categories: loan-related and non-loan related. First, let's take a quick look at some of the different types of loan-related closing costs you might encounter. One is the origination charge. The VA allows lenders to charge up to 1% of the loan amount to cover origination, processing, and underwriting costs. Lenders can choose to either charge a flat 1% origination fee, or they can pick and choose among a host of fees, so long as they add up to no more than that 1%. Another is the appraisal fee. VA buyers are required to get an appraisal. The VA sets the cost for these, not the lender. An appraisal is typically going to cost you about $425, and it's a fee that you'll need to pay before closing. Next is title insurance. Title insurance protects lenders and homebuyers if liens, legal defects, or other title-related issues are discovered after closing. Lenders will usually require the purchase of lender's title insurance, which only protects their interest in the property. You should strongly consider paying the one-time fee for owner's title insurance to ensure that you are covered too. And finally, discount points. Buyers can pay points to lower their interest rate. A point is equal to 1% of the loan amount. Now, this isn't something many VA buyers do, but it's an option and it's a loan-related cost. Now let's take a look at some of the common closing costs not directly related to obtaining a home loan. A couple big ones are prepaying portions of your property taxes and homeowners insurance bills. Your local government levies property taxes on an annual basis. As a homeowner, you'll also be responsible for paying for homeowners insurance every year, and at least a portion of these annual bills will be due at closing. There are also daily interest charges. You pay a home loan in arrears, meaning your monthly payment actually covers the previous month you lived in the home. So if you close in mid-September, your first mortgage payment probably wouldn't be due until November 1st. But lenders will collect prepaid interest on the loan between your closing date and the end of that month. Lenders calculate it as a per-day rate. Next, we have recording fees. State and local governments charge a fee to record your deed and your mortgage-related documents. It's important to understand here that some of the details of your real estate transaction will become public record after you close on the home. You may also have costs and fees at closing if you're buying a property that's part of a homeowners association. Now, one of the big benefits of VA loans is that sellers can pay all of your loan-related closing costs. On top of that, you can ask sellers to pay up to 4% in concessions. Concessions can cover those non-loan related costs and more. Some of the most common seller concessions include having a seller cover your prepaid taxes and insurance, or having them provide credits for leaving things behind in the home, like a pool table or a riding lawnmower. You can ask the seller for concessions to pay off your collections or judgments at closing, or even a lease termination fee. In some respects, as long as you stick to that 4% cap, the sky's the limit when it comes to asking for concessions. One of the early questions many buyers have is, what are my closing costs? And it's an important question for a lot of reasons. Many VA buyers want or need the seller to pay at least some of these costs, if not all of them. And that means asking for a specific percentage or dollar amount in your purchase offer. Where things can get confusing is that lenders can only give you a rough estimate until you've zeroed in on a property. That's in part because they'll need the property address in order to estimate things like homeowners insurance, property taxes, and more. You won't get an official estimate of your closing costs, which is known as the loan estimate, until a lender has an application that includes income and credit information as well as the property address. The loan estimate is, well, an estimate, and that means some of the projected costs can change, but there are limits on what charges can and cannot increase and by how much. That is why it's so important for VA buyers to get pre-approved and to talk with their lender before making an offer on a home. The sooner you and your real estate agent communicate with your lender about a specific property, the faster they can prepare that loan estimate. And that helps ensure you ask for the right amount of closing costs and concessions in your offer. So what happens if the seller refuses to cover some or any of your closing costs? Talk with your real estate agent and your lender about your options. You may be able to have the lender cover these costs. To do so, you'll usually have to take a higher interest rate. You may also be able to use gift funds from a family member or a close relation.